Hello and welcome to Livewire's C-Suite reporting season coverage. My name's James Marley and today I'm joined by Elanor Investors COO, Mr. Paul Siviour, for an inside look at their latest financial results and what investors can expect in the 12 months ahead. Paul, great to have you here.
Thanks for the opportunity, James.
Now, you've just released your interim results. Could you talk us through the key numbers that you think investors need to be aware of?
Yeah, I think there's three key points that come from the results. The first is we increased our recurring funds management income by 37% period on period to 23.7 million. And that's critical because that meant that our recurring funds management EBITDA grew from 0.6 in the prior period to 5.5 million currently. Now, secondly, we enjoy, on top of recurring funds management income from transactional activity, from growth in our funds under management. And during the half, we enjoyed an additional $5 million of income from the acquisition of a great deep value investment in Brisbane, an office asset where we raised $110 million off the back of the acquisition of that asset for 172. And then finally, I'd focus on the fact that we've increased our assets under management from $3 billion at 30th of June to 6.3 through some deep institutional relationships that we established in the half.
Okay. You touched on recurring revenue as your first point there. Could you dig into that a little bit more for me?
So it relates directly to what I was saying about our scale, having increased our fund from 3 billion to 6.3 billion at the end of December. So during period on period, we've added $8 million of funds management income, and that's all recurring income, and our costs have only increased by $1.5 million. So that's driven what we call operating leverage out of an ability to show the scalability of our platform. That is, our existing structures and capability can add additional assets under management without having to increase that cost structure very much at all.
Okay. Assets under management, as you mentioned, grew from 3 billion to 6.3 billion. The firm generated 8.3 million in earnings and announced a half-year distribution of 4.9 cents. Were these results above, in line, or below your targets?
We gave guidance at December. We don't give guidance forward, and that's because in respect of our income streams from acquisitions and new farm, they're difficult to predict in the context of both amount and timing also. But we did give guidance in December and we overachieved that guidance in our final result. Now, there's a couple of areas within the business too where we see opportunities to improve. We have a deep capability in office, in hotel accommodation, where we're the operator as well as the asset manager. And we saw some reduction in occupancy in the half to December as people took the opportunity to get overseas where they didn't have that opportunity in the previous half. But in the context of the result, we're pleased. And in the context of having added very significant assets under management and grown our institutional base of investors to now represent 59% of our assets under management, with our deep wholesale high net worth investors that have been with us for more than 10 years, taking up 31%. So two very strong sources of capital that we can continue to grow the business from.
Okay, well, let's switch out of the earnings and into the current operating environment. Rising or elevated interest rates and inflation have been a key headwind over the last 18 months. How have these impacted the sectors that Elanor is exposed to?
Yes, look, there has been impact, and it's been primarily around investor appetite. So while there was greater uncertainty in relation to the interest rate cycle, greater uncertainty in relation to inflation, investors are less inclined to invest capital until they see a more stabilised position. What we are seeing now is some improved sentiment in the market, and that provides increasing opportunities for us to find great investment opportunities and to attract the capital to those investment opportunities.
Okay. When I was looking through the deck, one of the things that stood out is that Elanor has a large exposure to both office and retail. Could you dig into the operating environment for these two sectors in particular?
Yes. Well, it's never been true to say that office is not office. And I say that in the context of the markets in which you're invested, because some markets are performing better than others. For instance, Brisbane and Perth are showing strong market rental growth, and people don't often understand that. If you're just getting your material from the media, from the print media, you probably think office is in a serious decline. Not the case. If you've got the right assets in the right markets that meet tenant demand, we're seeing the opportunity to improve market rents. And increasingly, I'd also point out that we raised that $110 million in December, James, for a deep value investment opportunity, office opportunity in Brisbane. So there's strong capital support. That was an oversubscribed offer with our capital partner Fidante. There is strong investor appetite for deep value opportunities. Now, we're seeing institutions still sitting on the side in respect of office. Some are starting to look at it more actively, but certainly we're in jurisdictions like the US, if you've got institutional investors reporting to investment committees in the US, they're certainly on the side when it comes to office. But we're seeing some improved sentiment, and if you've got the right assets in the right market that meet tenant demand, then that's the key. In relation to retail, and we're talk particularly sub-regional or sub-regional shopping centres, well located in metropolitan areas, particularly the eastern seaboard, but not exclusively. We have the good fortune to have, frankly, the market-leading team in repositioning retail real estate to higher and better use. And typically that's meant repositioning spaces that might be occupied by relatively poor performing discount department stores into supermarkets, fresh food, everyday goods and services, very much non-discretionary providers of services. We've had great success in that, and institutional investors we're seeing now are showing much greater interest in that investment class of real estate assets than they were, say, 12 months ago.
Yeah. Okay. One point from the announcement, you talked about a capital recycling program. Could you explain what that is?
Yes. We invest capital alongside of our investor base in our managed funds, and we are actively going to recycle $50 million of that capital during the balance of calendar year 24. And that's important because it gives us that growth capital to be able to continue to grow the business, grow funds under management and grow our earning streams.
Let's switch from the operating environment and have a look at the outlook. Where are the opportunities for Elanor to grow its sources of investor capital in the years ahead?
I think a critical area for us is institutional capital, James. What we've achieved in the 12 months to December is we've won 3 very significant institutional mandates, and we now have institutional capital partners in those 3 investors. And they are Challenger Life. We are the exclusive investment manager for the real estate assets held by Challenger Life. Challenger, of course, is the biggest annuity provider in Australia. And that's a deep relationship. Challenger also hold 13% of the stock in Elanor, and Challenger are also our capital partner in raising capital. I mentioned Fidante before. Secondly, we won an investment mandate with Abu Dhabi Investment Council. People would know of them, of course, a very significant sovereign wealth fund out of the Middle East. And we moved forward with them as a key partner as well moving forward. And then thirdly, we attracted capital to completely recapitalise our healthcare fund with an institutional core capital investor, an Asian-based semi-sovereign, that enables us to grow our focus on healthcare in terms of core assets. So we think very well positioned, having won those mandates, having been through extensive due diligence on our platform and getting the full tick to attract other institutional capital partners. That's not to in any way underestimate the ability for us to continue to grow with our high net worth capital partners who have been investing with us for over 10 years.
Elanor has set out a 5-year target to grow funds under management to 15 billion. Can you break down the pathway to that figure?
I mean, it's a very key target and aspiration for our business, and look, it might come with different mixes of capital, James, but we would call out, we think we've got the ability to add 4 billion plus of new institutional mandates and capital over that 5-year period. We see a very regular flow of high net worth capital for investment opportunities we bring to market. Call that 2 billion plus over the 5 years. That takes us to 13 billion. And then we would expect to complete some manner of strategic acquisition opportunity within 5 years to also add to our growth.
Final question, Paul. How should investors think about understanding the value of a funds management business?
Yeah, it's an important question because it's not always well understood. Funds managers really have 2 components of value. that the first is their net tangible asset backing on their balance sheet per security, and that is without taking into account any value for their funds management platform and funds management earnings. And the second element is, well, what is that funds management platform and business worth? And it's typically valued on the basis of a multiple of funds management EBITDA. And that funds management EBITDA is earnings less the entire corporate costs of the business. What we see at the moment is we believe it's for investors to evaluate, but we believe Elanor presents excellent investment opportunity. In our current trading price, our funds management platform is valued at about 2.5 times our funds management EBITDA. Our peers, more like 6. So we think we present strong investment opportunity for the market in the context of Elanor.
Well, Paul, thanks for coming in today and talking us through the Elanor results.
Thank you for the opportunity. It's been a pleasure. Thanks, James.
For all you viewers out there, I hope you enjoyed that interview. Remember, hit the subscribe button. We're adding fresh content just like this every week.